watching Trading Day on BNN Bloomberg. I'm Amber Kanwar. Thanks so much for joining us this hour. The losses in large cap over the last month have been the gains for small cap. In fact, small cap has been outperforming the S&P 500. The rally has been partly driven by expectations of an interest rate cut by the Federal Reserve, but also it comes off of underperformance by these small caps relative to the mega caps out there. Let's bring in Carey Hall, equity and quant strategist at Bank of America, joining us now. Thank you so much for joining us. I think the big question, of course, is can it continue? But before I ask you that, let's talk about why it's outperformed recently.
Thanks for having me. Yeah, I mean, I think the Fed has been a key thing that investors have been looking toward for small caps to rally. We had gotten a little bit more cautious on the Russell 2000 back in the spring when we had seen many of these above expectation CPI prints. And now that we've finally seen inflation start to surprise to the downside and making it more likely that the Fed will be able to start cutting, I think that's been sort of one necessary ingredient investors have been looking for to get more confident in small caps. So we've seen a number of factors that have been the leaders within small caps over the past week or two. Certainly, as investors were underpositioned in this size segment, we've seen a broad risk rally within the Russell. We've seen highly levered stocks among the best performers, so kind of speaking to that Fed cut expectation. And we've seen stocks with high short interest, as we saw some short covering, and deep value stocks. So, financials are an example there, which has been one of the leading sectors.
I guess the question is, can it continue? If you think about the central bank cutting rates, typically it's for a reason. There's a slowdown. How can small, economically sensitive companies outperform in that environment?
I think if we're in an environment where the economic data holds up, we have been expecting a soft landing in the U.S. That's in contrast to last year when, many were looking for a recession within the U.S. So I think the economic data holding up, manufacturing data, small caps are very sensitive to the ISM manufacturing indicator, for example, which, has recently started to decline. So I think we're watching a lot of the macro data. I think what is now the key important ingredient that investors will be looking for this rally to continue is profits. And, that's what I think will be key to the rally really extending, and why we'd be, why we would fear the rally could pause for now if we don't see a shift in the trends that we've been seeing. Because when you look at the earnings trajectory for small caps, at the beginning of the year, investors were expecting profits to recover and that by this earnings season, they would already be positive and outpacing large cap earnings. And that hasn't happened. We've seen earnings get revised down substantially, such that investors are now expecting a very back-end loaded profits recovery in the fourth quarter. And this earnings season so far, it's still early, but companies have not been beating as much as you've seen within large caps. Guidance has still been relatively weak. So I think we'd want to see a reversal in some of those, negative revision trends and weak guidance for the rally to really have legs on a broad basis.
Well, that's important to point out because as you talk about those earnings coming down, the stocks outperforming. So a lot of this has come through multiple expansion. And you've charted just small caps on their own on a PE basis, price to earnings basis. Are they getting expensive relative to how they've historically traded?
Right. Yeah. I mean, we're no longer seeing the index trading below its historical average like we were for much of the last several years. So the Russell is trading, in line to slightly above its long-term average of about, 15 to 16 times on forward PE. It's still the least expensive size segment of the three, but certainly no longer cheap on an absolute basis. It is still historically cheap versus large caps. And, I think valuation tends to matter more for if you have a long time horizon. So it doesn't tend to be super predictive over the short term, but over a decade, valuation does tend to have high explanatory power on what the returns of the index are. So if you're a long-term investor, I still think the fact that, valuations are not stretched and we're very cheap versus large would argue for better returns for small caps than for large caps over the next decade. But I do think, near term, it makes sense to be selective and, still focus on profitable small caps, even just, small caps that have positive rather than negative revisions in an environment where estimates have still been coming down. Because even amid the recent risk rally over the past week or two, besides leveraged stocks and deep value stocks, the other factor or characteristic of stocks that was one of the best performers was just positive estimate revision. So I think that could continue for the near term.
You mentioned that investors have been kind of underweight the sector, so maybe there's a fund flows argument. I mean, today, we are seeing that Russell outperformance, but we're still also seeing tech higher today, right? Like Meta and NVIDIA. What have you seen on the fund flow side?
Yeah, I mean, I think we did see from some of the global flow data that investors were big buyers of small caps. When we look at our investor flow data, we saw a little bit more mixed. Generally, though, we've seen investors seemingly have wanted to get more positive on small caps. So for many weeks this year, when we look at our investor flow data, we've seen some muted inflows into small caps. Much of that has been more on the ETF side than a single stock side. I think there's, more to go because when you look at investor positioning, and for multi-cap funds, so those who invest in large, mid, and small caps, they've been substantially underweight small caps within their portfolios. And we started to see that tick up a little bit at the end of last year, but really not much relative to history. So I think, investors have been underpositioned in small caps. We have seen some inflows. We have seen some bigger inflows by some flow sources over the last week or two. But the large cap inflows that we've seen over the last several years have certainly dwarfed the inflows into small caps. So from, a positioning, valuation, technicals angle, I think these are all supportive. And now we just need to see the fundamentals.
Is this a U.S. small cap story or is this a global small cap story?
I think there are other areas, particularly in Europe right now, where our strategists have become overweight small caps, where they think they've been pricing in some of the macro weakness and maybe positioned to see upside over the near term. That's an area where, in contrast to the U.S., estimates for small caps have actually been rising in recent years, and they're now cheap relative to U.S. small caps. So, that's another interesting area as well. But, I think even within the U.S., it's a good environment where pockets of the Russell 2000 can still outperform near term, focusing on value stocks that are profitable or have estimates that are being revised up. I think this earnings season is going to be very important. So, listening to companies' commentary to see the tone on small caps, seeing if these companies can beat and raise after several quarters where these numbers have continued to come down.
Jill,